Welcome to the 32nd episode of Dividend Investing Insights, your go to source for all things dividend investing. Whether you are a seasoned investor or just getting started, our channel provides insightful analysis, expert tips, and the latest news to help you build a reliable income stream through dividends. Join us as we explore high yield shares, dividend growth strategies, and portfolio management techniques to maximize your investment returns. Subscribe now and take care of your financial future with the power of dividends. In the episode today, we'll continue to look at the portfolio that we have built. However, like always, we will start with a quick recap of the markets. S&P 500 went down by 72 points to end at 5,954 points. Nasdaq too went down by 743 points or 3% lower to end at 18,847 points. And here locally, the ASX 200 also went down by 62 points to end at 8,245 points. However, as I've always said, stock markets and share prices will go up and down all the time. However, you as an investor should invest in shares that have the ability to pay dividends now, increase their dividends in future, and are fundamentally strong. Let's do a quick recap of the portfolio that we have built. First share we had bought was KDP. We bought 50 shares at 37.46. Then we bought JP Morgan Chase, 10 shares at 210.5. Then we bought 100 shares of AT&T at 21.91. We then bought CVS Health, 30 shares at 60.3. And lastly, we bought Unilever PLC, 33 shares at 61.32 for a total investment of $10,002.76. And that was the intent. We wanted to invest $10,000. Let's look at the current performance of this portfolio. As of this recording, KDP is currently trading at 33.52. JP Morgan Chase is trading at 264.65. AT&T is currently trading at 27.41. CVS Health is trading at 65.72. And Unilever PLC is trading at 56.6. For a total portfolio value of 10,902. However, that's not all. Since the time we have started, we have collected dividends of $139.15. That gives us a total portfolio value of $11,042.05. Now, you would remember that we had built this portfolio in November, and between November and March, which is roughly 4 months, we have increased our portfolio value by almost $1,000. However, we will look at it through the year, and I expect this portfolio to give us a return of between 12 to 15%. Putting this information graphically, this is how it looks. The blue line is the investment and the orange line is the week on week portfolio value. And, happy to share that we have breached the 11,000 mark for the first time. And I hope that this will go further higher as we progress. Okay. Now, KDP has been a share in our portfolio that has not been performing as good as some of the others. So we had started to look at some of the critical data as to how it has been performing quarter on quarter. We had looked at the Q1 data, we looked at Q2 data, we looked at the Q3 data, and in Q3, KDP had net sales of $3.9 billion and an operating income of $1,050 million and an earnings per share of 51 cents per share. Last week, they announced the quarter 4 results, and it was pleasing to know that the net sales have gone up by almost 107 million, 100 to end at 1.07 million to end at 4.07 billion for the quarter. Operating income has also increased in the similar proportion to end at 1,129 million, and earnings per share has also increased from 51 to 58. This indicates that the company is fundamentally strong. There's nothing wrong. We will continue to monitor it, watch it for another quarter. However, we will not look at it on a weekly basis. But what this shows is that the share is strong. Maybe there are some market forces that are pulling the stock price down or up. However, the company remains to be strong, and we will continue to be invested in KDP and not look at moving away from KDP. Well, what are the upcoming dividends that we have? And we are always looking out for dividends. We are hungry for dividends. So CVS Health is paying out this weekend, and we will collect it next week, 66.5 cents per share. And Unilever PLC is paying out on 28th of March, 46.74 cents. And then we'll start collecting the shares, the dividends for the next quarter. So As we come towards the end of the episode, putting up the dividend investing checklist again, do you understand the company's business? What is the dividend and the dividend yield for the current year? What is the average dividend for the past 5 years? Average dividend for past 5 years should be lower than the current year's dividend. What is the payout ratio? It should be in the range of 30 to 70. What is the price to earnings ratio? It should be anything between 1 to 20. What is the price to book ratio? It should be anything between 1 to 3. Does the company have year on year revenue growth? Does the company have year on year profit growth? Does the company have positive cash flow? Use this checklist to make your investment and look forward to you joining in another episode of Dividend Investing Insights.